Hey everyone, it's Evan here from the Trade Risk on Tuesday, June 6th. We're intraday right now, and this is a short video answering questions or tickers that you guys submitted that you wanted reviewed. We only got 3 of them, so not a lot of action today. You guys are sleeping out there or just not that interested in what I have to say, which in either case is fine by me. We got 3 names we're going to look at. We have Teradyne, Electronic Arts, and Apple. Those are 3 names that you guys submitted. So we're going to review those. Before we do, let's take a quick look here at the S&P 500 just to look at the broad landscape. I've been mostly away from charts at this point. I've been on a pseudo vacation, had parents kind of coming into town, so I haven't been able to post too much. So let's take a look here at the S&P 500. We can see we're down today. We're again intraday right now. We're down about 55 cents in the SPY. It's about 1:30 p.m. Eastern at the time of recording this. And markets, though, despite being down today, despite having an inside day yesterday, are quite healthy. They are trading just under all-time highs in the S&P 500, in the Dow Jones, in the NASDAQ composite, and just the Russell 2000 remains perhaps just a bit stubborn as it continues to consolidate sideways in that same old multi-month range, but it is trying to firm up. It is making an attempt to get out of there and lift higher, so we will want to keep an eye on that. But all in all, a very bullish landscape at this point. Trend remains higher, and what would change that? Well, if we fell back below 240, if you're really tactical, I'd say 242. If we start to lose this general level here that we had this nice little 3-day pivot and then broke higher from, if we start to lose below 242, I think for the active traders, momentum-wise, that upper-level momentum, something to take notice. But all in all, it would, from a more structural standpoint, back below 240, back into this old range here for the SPY ETF, would be something to pay attention to. Otherwise, bulls are in control, trend is higher, and things look pretty good. So let us get into some of those names there that you guys submitted. So we'll start with Teradyne here. And this question comes from Pope. Pope, good to hear from you again. And the question really comes around, where would I exit this position? Where would I exit this trade? And we're really talking in reference here to the breakout that happened back in late 2016. So the breakout from this very long multi-month, in fact, multi-year range in between, say, $17 and $20, playing this breakout, where would sort of the exit point be now? And just want to give a general sort of comment here, as I always want to be a little careful when specific entries, exits are discussed, because it just comes with a lot. There's a lot more to think about. You have to think about the strategy, the time frame, the risk tolerance of the trader, and there's just a lot of other variables that sort of come into play here when talking about specific, entry exit points. But I'm happy to talk about sort of some high level thoughts, give you some ideas on how to manage this trade, and also sort of a second kind of note here is, this is a multi-year pattern. This is sort of beyond my time frame length. This is not a trade or setup that I would particularly be trading, something this long in duration. This same exact look I would love to trade, but generally this is going to be 1 or 2 months of price action instead of 1 or 2 years. So just keep those 2 things in mind. But here's the way I look at it. For TER, if I was playing this breakout here of this 2-year range, and I got involved in it somewhere over here, call it even 23, as it closed firmly above this prior range back in October 28th of 2016, and I was to capture or attempt to capture this trend here. The way I approach these setups, these big base breakouts, is that I prefer to use a time frame that would align with the type of setup that I'm trading. So I would be using a weekly, if not a monthly time frame to sort of manage this trade. And the way I would look at it would be, the way I would trade this would be to take profits into strength. So take profits as a stock extends away from some of these fast moving averages. That's the way I do things back on the daily time frame, trading, multi-week patterns. So I would have that same thought process here. My first partial sale would probably be this bar right here. This would be January of this year, as it starts to really extend itself away from the 8 period. And I would generally take profits anywhere from 20 to 35% of that position off at that time. So I would just routinely sort of scale out here, would probably scale out more in between this March and April of this year, as again, we start to extend away from this 8 period. So I'd probably have 2/3 of this position off at this point. And what I like to do with the remaining shares, those remaining 1/3 to 20 to 40% of that position, depending on how I scaled off, is to just turn into a trend follower and just assign some moving average or some previous price structure, maybe a 5 or 10 bar low. That is going to be the exit for me to get out. So using the monthly chart, probably the 8 period moving average is probably just going to be where I would exit. And if we get a close back below here, you could use an intraday break or an intra-month break of this 8 period moving average. That's a way to do it too. That's where I would be exiting. If you're looking at more of a weekly time frame, again, you can get a little more refined, start to use some previous price structure. You could look at this low here from back on May 19th. You could see the low came in around 33. You can see we haven't actually closed below the 8 period moving average until or since we saw this breakout back here on the end of October in 2016. So perhaps, using this low here at 33, if it starts to close below here, so below the 8 period, and takes out this low here, maybe that's your sign, your sign to exit. But again, that's just one method. If you're a true trend follower, if you're looking to capture a much bigger move here in Teradyne, and you can sit through a pullback that would potentially, a 30 to 50% pullback, which would be entirely reasonable, all the way back down to 30 or 25 or $27. If you could sit through that pullback and you want to try and capture a trend that would continue for the next multiple years, that's again, that goes into strategy, and that goes into a lot of other specifics. So it's perfectly viable. But as far as how I manage breakout trades, momentum trades like this, the first sort of walkthrough there of scaling profits and then becoming a trend follower for that last piece is basically how I would look at it. So hopefully that helps. Hopefully that at least gives you some ideas. No one idea there is right or wrong. There's plenty of ways to tackle that question, that answer. Okay, so next up is electronic arts. So electronic arts, really similar to Teradyne, has been on a pretty strong tear here over the past several months, over the past several years. This is the monthly chart of it. You can see quite extended here on the monthly chart, above $100 now. If we go down to a weekly chart, you can see equally as strong, good volume pattern, especially recently on this latest surge here. And again, you can see fairly overextended there on the weekly chart. And on the daily chart, again, good volume pattern, had this nice gap up here on the 10th. I'm not sure what that was. I'm assuming earnings, and price has continued to just sort of grind itself higher, and it's trading at all-time highs. So EA, very strong chart, all things considered. There's certainly no lack of strength here. The real battle, the real question just becomes is how much fuel does it have left in the tank? Now, certainly I am not suggesting, as I never do, to try and short something like this, or would ever consider trying to get in something's way like this. But as far as new entries, just because I don't know where this question comes from the perspective of, for new entries, this is a bit just overbought, overextended on all time frames, where I need some type of bigger reset to occur here. So as far as new entries go, I don't see anything that jumps to mind here. It would be a pure sort of nosebleed momentum play, trend play, if you were trying to jump in at this point. But again, I just don't see the risk reward, especially in a slightly bigger name with a $35 billion market cap like Electronic Arts. So for new entries, I would need some type of reset. It'd have to either have a good pullback or sideways consolidation to work off this recent move. If you're already involved in this trade, then again, Very similar to Teradyne, that same thought process is how I manage trades, scale into strength, and then continue to trail a stop on the remaining shares. So for me, Electronic Arts looks good. This is your bigger term reference point. If it started to fall back into this gap here, then there's finally some signs of a loss of momentum. But really, Electronic Arts going all the way back to the beginning of this year has acted well, has been above the 20-period exponential moving average, which is a sign of very strong strength in a stock. And until it starts to close below some of those moving averages, or again something like this type of price structure here at 105, that's when I would start to perhaps tighten up my stop or consider reducing shares, something along those lines. So hopefully that helps. I'm not sure exactly if you're in the position or if you are looking for that new entry, but hopefully we sort of explained both scenarios there. And finally, let's move on to Apple. So Apple here, again, a very kind of extended high moving stock recently over the past several months to a year really. If we look at, let's go to the monthly chart, we'll continue with that same trend here. You can see monthly chart, we are extended above that 8 period, trading just under at all-time highs. We had the big breakout here at the end of 2016, or actually, second, third quarter, as we started to break back above 100 and then start to get going above 120, broke that downtrend line, and then we haven't really looked back. Weekly chart, again, nice and strong here, pretty good volume pattern all the way up, very smooth sailing here on the weekly chart. And then if we go back down to the daily chart, you can see got a little sideways consolidation setting in right now, and that could be setting up some good opportunity, or at least a reasonable risk to reward to get involved in Apple here. And again, the daily chart ever since really February of this year with this gap higher above 125, which I believe was earnings, has continued to just kind of grind higher. It had a little period of a pullback here, but it's really just been on the move, hasn't been giving any big pullbacks, letting people come in very easily in Apple. Most new longs are sort of being forced to pay up here at all-time highs. So with that said, for Apple, again, not sure the direction of this question if you have a position or not, but it does actually lend itself to an entry here on the daily chart. You can see we've moved sideways now ever since topping out back in early May. So it's been almost 1 month of sort of moving sideways here above the 20 period, which is rising, and you can see it's trying to get going today, up 67 basis points. And you have, a reasonable spot to either measure some risk against below last Thursday's lows on 6/1, which was June 1st. Right around 152, we kind of put this little pivot in here. So that's a reasonable spot to maybe put a very tactical sort of upper level momentum stop placement in. You could use 150, you could use below here a little bit, but something to get involved in this existing trend. It is extended, kind of the same comments we really had in those other two names. If you look at the monthly chart, we are a bit extended, so you got to ask yourself how much fuel is left in the tank. This is a huge market, the largest market cap, $800 billion in Apple. So this is typically not a name that you're going to see double in the next month or two. So something it's going to be a little more slower paced name, but something that could continue to sort of just continue in this uptrend here. Nothing at this point suggests that this trend is ready to stop. And in fact, even if you looked at the monthly chart, it's caught my eye as I was looking at it, you could project some type of measured move here if you took the swing low from 56 to call it 135. You took that distance and you applied it from this swing low here to 90 and you project it up. That would give you something along 170s or so, 165, 170s as a target. Again, loose sort of math in my head, you could measure that out, and again, the scaling there could change things a little bit, but something to keep in mind. Maybe this continues higher for, maybe it hits that $1 trillion market cap. Maybe that's where you know, the larger magnet is. But anyhow, from a shorter term daily chart price structure perspective, you know, you do have some spots to sort of measure risk against. You get this nice sideways consolidation. You know, if we started to lose this 20 period, if we started to break below these recent lows, you could exit that trade, or you know, tighten up risk, get out of a position, so on and so forth on a real tactical sense. But if you're a longer term holder, you're going to again be using these longer term time frames like the weekly and monthly, and probably be using some of these slower term moving averages to withstand some of those small pullbacks. So that's it. That's Apple there. That's Teradyne Electronic Arts, a little bit on the markets. That thanks for everybody who answered or who submitted questions. And that's it. So thanks for watching, and talk to you again soon.